Good day, everyone. Good morning, good afternoon, good evening from whichever part of the world you are watching my video. In today's video, I want to show us a small trading tools that I just developed for my strategy. Since 2008, I have stopped using stop loss. Yes, you heard me right. I've stopped using stop loss. And when I stop using stop loss, that is when I started making consistent income in trading forex. Let's ask ourselves. Everyone is using stop loss. Everyone is buying at demand zone and selling at supply zone. Everybody does the same thing in the market. That is why most retail traders are just struggling for several years without any profit. But since I came across hedging strategy, my trading story changed. And that is what I want to show you something today about trading a hedging strategy. Hedging strategy is not common. If you see most on YouTube or most people you see, nobody talks about it because it's for professionals. And when you know how to hedge your market instead of using stop loss, then you have got the secrets of many hedge fund managers, why they survive for decades without blowing off their account. By saying this, follow me and let us move the journey together. Thank you. So, welcome back. Now, I'm going to install a piece of software that I just work on for about a week now that I'm using to trim my hedging. We call it hedging calculator. I developed it because of some of my followers that are interested in trading hedging system. They need something that will help them. I can trade without a calculator, but most of my followers cannot trade without a calculator. So that's why. So now the first thing is we are going to install the calculator inside our indicator folder. Okay, that's the first thing. So let's go do and do that. Copy the piece of software. Should be in case you are one of the people that are interested and you want me to send it to you. Then let's come to open data folder, MQF4, then indicator folder. This is where we're going to store the calculator, but because I have a lot of indicators here, I'm going to create a folder for it. Okay, I've then create the folder. I'm going to open the folder, then paste the calculator inside. Then we'll close it. We scroll to the indicator folder, we'll refresh it so that our indicator can come. Let's minimize the expert folder. Now we have done this. Okay, so now the next thing we want to do now is to format our screen to look nice so that it can be peaceful when we are doing our training. So to do that, I right click, I come to property, I want a black background and a white foreground. Um, I want my candle up to be this. I want my down candle to be red, green, red. Okay. Then I will see. Okay. So my screen look like this now. I want to remove this time frame indicator if possible. But if I cannot remove it, then I'm gonna leave it. Okay, I couldn't remove it, but it's not a big deal. Okay, now I've done this. So I need to look for my calculator now and bring it to the indicator, Hedging Pro Trim Calculator, which is this. Then I drag it to the chart. There's nothing to modify or to do anything. Just drop it to the chart and put it. And this is how the calculator look. Okay. Now we need to do some few settings. We don't want our candles to intervene, to pass through the interface of the calculator. So we need to come back again and say property and come to, I think, common. Chart on the foreground. We don't want it to be on the foreground. Then we say okay. So good. And you can see now that our calculator is now in front while the candle is at the back. So everything look clean. We don't need all this again. We want a very big screen so that we can watch whatever I want to watch properly. Now, if you look at this account, the purpose of why I'm doing this is because it's more practical. If we look at this account is this is my son account. Yeah, my son account, because all my kids are traders like myself. I'm the one taking care of them, because this is one of the business that I always plead to every family to let member of the family knows about, because this is the only business you can do with just a piece of laptop and you move around. You don't need to have a physical office anywhere. Trading is number one. So now we can see, if you look at it now, we can see that we can see the way we use robots that do all this. It's only when the robot edge for us, that's when we are sitting down to try to trim the edge ourselves. We are looking at creating another software that can do this automatically, but for now we do it manually with the help of our calculator. So now if you look at it, we have sell position severally, which is 1 2 3 4 5 6 7 8 9 10 11 11 position open. That's why the robot edge the account at 0.11, because we are selling in a grid mode 11 times. Our market move against the selling, and there's a particular level that we normally, most retail traders normally use stop loss. But because we don't use stop loss, we edge the market. The robots need to edge the market for us. So if it is stop loss, you have to lose maybe 15% of your account or 10% of your account, depending on the way you set the software. If you need the software, please let me know, because I trade with, I'm a full software trader. I don't have time to sit in front of my computer. The only time I can sit in front of my computer is maybe once or twice in a day, 10-15 minutes to do hedging, should be in case we have hedging solution. And before I go far, let me show all the history of this account to everyone. You can see that this account started trading in February 2020, but our first time that we are going to see it on this account to monitor, to work manually is when the account edge. And when is the account edge? The account edge in May 15. Can you imagine? February, March, April, May. That means for 3 months you are not doing anything as a trader. The only thing you are doing now is just once in a day or once in 2 days to trim the edge. That's all. And we have a calculator that is helping us to do it. And how are we going to do it? Now, we are going to key in all these parameters. You can see that all these settings, we have 11 of them. So we come to our calculator, 0.01, 0.01, 11 places, 0.01, 0.01, 0.01, 0.01, 0.01, 0.01, 0.01, and there's another one, 0.01. We will now see that we have 10 instead of 11, so we can make one of these because we have only column for just 10 entry. So we put 0.02 here so that we get 0.11, which is our edge value. Okay, but if you look carefully down here, you see minus 0.11. This is telling us that this account is not edge. That means one side lot size, all these lot size belong to one side of the trading. So on a buy side, if you look at our trading history very well, on the buy side we have 0.11, so we put 0.11, and what did you see here? You see that everything becomes 0. Whenever you do perfect edging, you must always have 0. That means we have equal lot size on each direction of the market. Okay, now that we have solved this problem, what is the next thing to do? So if we want to see what we can do next is the profit for 0.11 is what? If you look at it here, this is 26.35, so we say 26.35. So the calculator said we have to apply 15. We have to apply 15 pips. We have to apply $15.35 to the other side, to the sell side, so that we can eliminate, we can start reducing our what do we call it? Our edge. So we keep $11. We take 15.35 back to the market. Okay, now to do this, if you remember that all these sell side are negative. So now let's try to see something here. You see, if you look at our sales, we have minus 18, minus 16, minus 15. We have minus 14. So if we start from this side, that means these are the first trades that enter the trades edging. That enter the sequence. And if you look at down here, these are the last trade that enter the sequence. So, but if you look at it, if I add, because now as it is now, I think it's better for me to trim from the last trade, which is last trade. We call it LIFO, last in, first out. If you come to the top, which is the first trade that came in the sequence, because if you look at this trade was on April 24, and which is the first trade on the sequence. And if you look at this, This trade was on 15th of May, and today is 20th of May. This is about 5 days ago. So this is the last trade that into the um, that came into the market. So this is a last trade. This is a LIFO, last in, first out. If you are going to start streaming from the bottom from this, and if you want to start streaming from this one will be first trade, first in, first out, FIFO. We use this in accounting terms. So everything you learn in life is applicable in future. So now, because of the way we are using 0.01 throughout, so I think it's be better for us to use from the bit LIFO, last in, first out. So this one is, don't put minus, just put 2.93. Then 4.10. Yeah, don't mind. You can see that everything is where the value are changing. Yes, it doesn't matter. We are going to adjust to the BRS minimum 5.22. So this one give us let's try 5.22. Okay, let's leave it like this. So let's see what this gives us. So if you look at our calculator, this gives us 12.25, and this is negative. Always remember, because these are sell side, they are all negative. So in this case, what are we going to do? No, all these things are changing, but we don't have a choice. We just have to look. And this one is 26.44 now instead of this. Okay, no problem. So now we are going to look at these three trades, 1, 2, 3, and all these three give us 0.03. So we put 0.03 here, 0.03. And what is our losses? Our losses is 12.25. Our loss is 12.25. And application now is not from there. We just want to pull out the loss size and the total sum of the loss size in terms of money. Our application must come from the profit trades, which is apply. You can see apply is 15.35. So you can see what the calculator gave us here. The calculator said we can close all the three trades 100%. Yes, 100% for these three trades. That means we are still having profit of because if you look at it now, we have $12, we have $15, so we still make a profit. But if you come and look at here, you can see that we have a float. That's why whenever you are trading with a broker, you have to look for a broker that doesn't, in hedging, that doesn't take all these small money, small things from you every time. There are many brokers that doesn't charge for swap anymore, but unfortunately this broker charge us swap. So in this scenario, we have minus 2.5. You have to put this one in consideration as well. So if you look at this, we have about $2 plus, but we cannot do this. That means it's better for us to just delete this row. No, let's put that row 5.17, which is the profit here. This is what I key in now. So let's remove one of these profits, because when you are trimming your edge, that doesn't mean you won't make a profit. You must keep little profit every time you are trimming. So we have 9.27 now. So let's click here and say 9.27 is our losses, and this is our profit, which is still remain this. So now we are going to, and this should be 0.02 now. So now you can see it said we should close everything in total, close all the 0.02 lot size, and that's what we are going to do. So we are going to close this. So we're going to close this, and we close this. Okay, so we close those two. And on our buy side, because we have closed 0.02, for us to be edged, for example, now let's say we close 0.02, let's delete it and delete this. Let's see what is going to happen. If you look at here, that means our edge is not more balanced. One side is bigger than one, you see. So we need to remove 0.02 from this profit trade. So, and for us to remove 0.02 from this profit trade, what we're going to do is two things. We can 0.02, let's remove it from this trade. Market execution, we're going to remove 0.02, or better still, we close this 100%. We close this order 100%, close it completely. So now that we have closed it completely, we have, how many floating trade do we have? We have 1, 2, 3, 4, 5, 6, 7, 8, 9. We must have 9 because you remember from 11 we remove 0.02. So 0.09. And now if you look at this trade here, if we look carefully, you can see that somewhere here we have something like this. We have a supply zone here. So trading is very easy depending on how you take it. You can see we have supply zone here. So instead of for us to enter the market directly, immediately, we can give a benefit of doubt. Remember that anything you do in the market is 50-50 chance. There's no accurate, correct decision you can make. So we can put 0.09 here as our pending order. So we come here and put 0.09, our pending order, and that will be buy stop at what price, which is this price, which is 0.67170. So 67170, then we put, so this will be a pending order. You can see it's a pending order, but we are going to use it to edge the other side. You see 0.09. So here, remember, we have 100% close everything. Yeah, so now what we have there, we have 0.09 here, no profit. You can see that now everything is balanced. We have 0.09 here, we have 0.09 here, everything here tends to become 0. So we can just make the arrangement of the lot size properly again. So we have this, because immediately you finish your calculation, just turn back your calculator back to 0. So we need to remove this 0.02 at the bottom. That's what we have taken out of the market. So you can see that we have 0.09, 0.09, and we balance our calculator to be 0. That means we are fully edged. The only time this 0.09 will come is when markets break here and pick it again. If it doesn't pick it, then we have opportunity to follow this market down by our edge side until we eliminate the edge completely. This is very simple. You can do this one once in a day. You check your account once in a day. You don't need to stay on your computer 247. Remember what I did here? I just put 0.09 buy side. I just put it on pending order. Why market is going down? In the past, for other retail traders that are trading all those information in the trading information they are getting from their mentor or whatever, before you have to put, you remember that you put stop loss here. So I don't use stop loss. I just edge it, and I use my calculator to balance the edge. If this video is interesting to you, uh, give the video a thumb up, subscribe to the YouTube channel, because all this small information, everyone needs it to change the way you are approaching your trading strategy in the market. Don't do common thing that everybody are doing. Things has changed, because imagine 1 million people are buying at support zone. That's why most of the liquidity are grabbing, because the smart people in the market knows where you put your stop loss. But imagine you edge, and even if it you lose nothing. You lose nothing in the market. The only thing is you have to look for someone who has been trading hedging system properly for a very long time. I can put you through like this kind of information I'm giving you this morning. And the next training, I'm going to show you this. We have several approaches to trade the market, and as you are trading, remember you are making profit. Let's check what we did here today. Custom. Let's say today. So after we finish the trimming, we still bank $13 as our profit. We still bank $13 as our profit. You see, so that is how good it's trading is. If you want to, you may not trim. You may say, okay, you want to trim once in a week, twice in a week. You don't need to sit down on your computer. That is the beauty of learning how to trade with hedging. And you can see, if I can tell you that robot has been trading hedging robot, because I use hedging robot as well, because as hedging trader, if I can say hedging robot has been trading this account since February 20 this year, and the first time I will sit on my computer to do anything manually is after 3 months plus. So when you are trading, you don't need to trade with anxiety. Make systems simplify your strategy. You understand? I have many screens around me here, but because I'm a software developer, so I don't have a choice. I just have to have them around me to develop my indicator, to develop my EA, my strategy. You see, so this is where I'm going to stop today. Hedging is a very good strategy. If you have anybody that can teach you, you can please go for the person, because this is the only way I know you can sustain and protect your capital in this highly volatile market. And it takes a lot of tricks. You just don't do what everybody are doing in the market. Just do something a little bit different, so that you will not be in that crowd. You can only see that they normally say 99% of people are losing money, while 1% are making money. Well, that 1%, those 1%, they are doing different things in the market. Don't use stop loss again. The first thing, all your strategy, remove stop loss. Because for every decision you make in Forex market, you have 50-50 chance. 50% of getting it right, 50% of getting it wrong. But with hedging, even if you get it wrong, you are still going to make it right in future. Thank you, and God bless. Bye.